Hi there, it's Bill with Smart Trades, and it's Tuesday, August 17th, around 12:30 Pacific time, heading into the close about a half an hour before the stock market closes here on the West Coast. Anyway, first off, I wanted to take a look at the review the S&P, the spiders in particular, and if you'll remember, I kind of gave you a rough draft about a week ago on where the spiders might bounce up to. That was about the 111 area, more or less, perhaps a little lower than that, perhaps 110.90. This previous shelf of support and previous resistance area, and I think that area is still looking pretty good as a place where the market's going to have some trouble with. We'll see. I do have an alternate, more bullish count where it's going to go through there, but if we were to either get a corrective style failure or an impulsive failure near that level, I would consider the short side there. Anyway, here's the Elliott wave count off the highs. I do see 5 waves down, a 1, 2, 3, possibly a triangle here, and then a 5th wave down. Now that can be counted as wave 1, or the alternate is that this is an expanded flat where we have A down, and you can see the ABC of B up, and then 5 waves down of C, in which case this is an impulse rally that ultimately will make new highs. To be honest, I'm not quite sure which is the case, and there's somewhat mixed signals here. I'm going to show you now the NASDAQ 100, and again you can see the 5 waves down. The NASDAQ is a little different in that the final decline actually looks more like a corrective pattern. It could also be counted as a triangle and then a 5th wave, but I can easily count this as A up, B down, and then we're working on 5 waves up a C, which would ideally target, perhaps that 1875, 1880 area. Again, that previous resistance for if we did get 5 waves up off of the low into that area, I would look at the short side there. Now I wanted to take you to take a look at an alternate count, and here's the Dow 130-minute chart, and I've kind of compressed it so we can both see the overview and some detail as well. And one of the things that's bothered me about my own count as well as counts by others is that this leg down into early July, I always thought really best counted as an impulse type wave, 5 wave structure, and if you do count it as such, you can count 5 waves down into the May low and ABC back up, and then 5 waves down into the July low, and that way this entire pattern counts as a 3 wave structure in ABC, which I believe best counts as A. Then from there you have what seems to be, obviously to my way of thinking, a corrective rally. If you throw in that expanded flat, we've got ABC up, ABC down of X, and a second similar magnitude ABC would take us right about up to the old highs around 11,200 basis the Dow, perhaps a little higher. And that would be a very nice pattern in terms of looking for a possible larger flat with A down ending in July and B up, perhaps ending towards the end of August or in early September, and then a really scary C wave down that would get everybody bearish into October, which is quite often the case. Anyway, let's go back. I want to take a look at the longer term picture on that. And let's look at the Dow first. Bear with me 1 second. And here we go. I've got a regression channel over the rally from the 2009 lows, and this is a 1.618 standard deviation bracket on it. And as you can see, the market has really tracked very nicely, hitting just below and then holding just above and finally just below again that regression channel. And that 1.618 bracket would come in again towards the end of September or perhaps early October, and it would also intersect with a 38% retracement of this entire rally. So again, this is the alternate count. I'm still not necessarily buying into this scenario, but I think it is a possibility, so we should be aware of it. And again, we've got the large rally up, which I'm calling A, into the April peak, and then a smaller degree A down, a possible B back up, which is going to be very similar to the April high, and then a sharp C wave down, which would take us into the perhaps 94.50, 94.60 area. But as always, we'll take that one step at a time, and we'll see how it develops, and if in fact we even make those new highs. But again, for now, let's look for the market to perhaps test resistance, and if it fails there, I would be looking at the short side. And just quickly, I wanted to review the dollar index. As you may remember, I was looking for a possible low between the 80 and 80.50 area. Last Sunday I made that call, and in fact it had already bottomed at 80.17, pretty much in the middle of that range. From there we have what looks to be an impulse rally back up. The decline off of there is holding support. So a fair chance we're going to get another dollar rally here because of the impulse up. The likelihood is that we're going to get another bull leg at least up in the dollar, and perhaps much more than that, but we'll have to wait and see. Also, I talked about crude oil at that time. Let's take a look at that chart. And indeed, we were looking for the 83.84 area. The market actually peaked around 82.95, right at the top of this channel. The decline looks impulsive, so a corrective rally here, perhaps back to the 80 area more or less. We'll have to see how that develops. Possibly could be a sell in crude. We'll have to wait and see. Again, we want to see a confirming corrective rally that falters. And finally, I would like to take a look at the gold market. Some folks are saying that it topped. To my way of thinking, I think this decline best counts as a corrective decline. ABC, X, ABC. I think it's a bit of a force to call this a five-wave structure down. It is possible it's an expanded flat rally here, but this does not look like a completed 5 up, so it's an unusually long rally. At any rate, long story short, I think there's a pretty good chance. In fact, I favor new highs in gold. That's about it for now. Hope you're having a good day and a good week ahead. Thank you so much for watching.